Let's get across the market open now. Zach Riaz joining us from Banyan Tree Investment Management. Zach, welcome. As well, gee, the end of the year is rapidly approaching, isn't it? But and we're wondering whether Santa's going to visit this year, don't we? But I mean, let's start on what we're seeing on Wall Street at the moment. The Nasdaq's actually off by about 6% so far this month.
Yeah, and look, the volatility's back. Had a bit of a correction last week, and it got bought back a little bit. Obviously, what happens with Nvidia, everyone knows what happens with Nvidia is going to have a bit of an implication for where prices move. But look, you know, Andrew, everyone talks about this being like the 99.com boom and bust. I just wanted to show this chart. I think it's worth highlighting, and what it basically shows is the run up from January 1999 to 2000. Well, obviously the peak in March 2000, and so the circle red dots, circles down the bottom are basically showing when the index was oversold. And long story short, during that run up, whilst the market was still running up, the Nasdaq was still running up. It had more than, or at least 6 pullbacks of 5% or more, whilst it still continued to run up. And so, look, everyone's trying to time this market. Everyone knows there's parts of the market is bubble. Everyone knows the capex at some point will moderate. I mean, these are all circular comments that everyone knows about. But the point is this: you should be prepared for volatility, big sell-offs, yet the market continues to trend higher if the .com comparison holds true. So the point is, I would be cautious of chasing the rally too much, and I would certainly continue to manage your exposure. I think most people continue to manage their exposure and continue to pull back on significant rallies. So, but this chart just shows that expect a lot of volatility going forward. As you know, I think it's fair to say we are probably in late cycle, and so we think next year, second quarter, is something you really need to watch out for.
Well, okay, let's actually get to a more contemporary chart and take a look at the local market and what we're seeing, bearing in mind those comparisons that you just talked about with 99, the .com bubble.
Yeah, look, in the local market, I mean, what's driven recently, you've noticed, I think one thing I've really noticed is the quality factor that's really pulled back. But the other thing that's kind of pulled back is, obviously REITs on the back of, the Fed, not the Fed, this RBA unlikely to cut any further. But I just want to highlight a couple of real high quality stocks, because this is just not globally, but in Australia as well. Likes the quality factor, the likes of Zeros, the likes of REAs have really pulled back. And this is again showing you on the RSI index that some of these high quality stocks are oversold. I mean, Zero recently reported the result wasn't too bad. Yes, the acquisition, you may have some concerns about what they've paid, but strategically we think that acquisition makes a lot of sense. The very mature, high cash producing Australian, New Zealand business is still pretty good. Yes, the sub growth is a little bit slower. To acquire those subs is a little bit harder, but nonetheless, that provides a really good platform for global growth. And so, very stable management. And so Zero looks like, I think it's just way oversold territory, and it's been sold off with what's happening offshore. Similar with the REA, it's a high quality stock. REA, I believe, probably is impacted right now, likely on the back of the concerns around, obviously the Reserve Bank of Australia not cutting any further in the current cycle. And so, like other REITs or property exposed, consumer exposed stocks, you've seen them come off. But, at current levels, even from a trading perspective, I think REA looks like a really good trade. And for a long-term patient capital, I think REA is really worth a nibble. So in the current shenanigans and movements of what's happening offshore, and then obviously domestically, I think the quality factor is starting to look really good, because some of the cyclicals have started to rally really hard. You've seen commodities start to rally really hard on the back of the critical minerals, etc., and obviously and copper and etc. So yeah, I think there's an opportunity domestically to start picking up some of these businesses that honestly anyone who thinks like a business owner would want to own.
All right. You're also focused on the REITs. What are you seeing there then at the moment?
Yeah, look, Andrew, a few people or investors have asked us, where are you looking for yield? You know, where do we go? And, you know, you go to the REIT sector. Look, operationally, a lot of the REITs are in much better position. I'm talking about retail REITs as well. The likes of Vicinities, the like of Waypoint, and etc. And Centra Group. But I just want to highlight a couple of things. First and foremost, look at Goodman Group. It's 35% of the ASX 200 REIT index. I think in a lot of way, Goodman Group is now behaving in line with AI stocks because there's been a big push towards data centers and whatnot. The industrial part of the business was already very attractive, but now they've really gone leveraged into this AI thematic.
So why has it underperformed so much?
Well, I think on the back of what's happening globally. If you see, so this is exactly my point. If you've got a passive exposure to the Australian REIT sector, or the ASX 200 more specifically, I think Goodman is going to move more in line with the next DCs of the world, the tech, the AI narrative, and I think part of the weakness is definitely got to do with what you've seen offshore. So I think you have to be a little bit more active in the Australian REIT sector. But I've also hired Digico. So Digico's off a fair bit as well. I think it's there you go. It's down 24%. I think if you're looking to play the data center, I think this may not be a bad way to get some exposure. It's got a decent yield. It's got a very decent pipeline of capacity that's coming online. And then obviously it's down 24%. So I would almost take a little bit profit out of Goodman Group or take some exposure out of Goodman Group and put it into Digico.